All right, just like that, we are live. Whether you're watching this back or watching it live, I appreciate you being here very much. There's so much to talk about right now, so much going on in global markets. I mean, right off the bat here, I'll start out. I'm sure you guys have all seen this. This is the Japan index down 12.4%. Got absolutely crushed. For me, it was last night. There's a 12-hour difference from where I'm at and Japan is at. So looking at Sunday night, just seeing crypto fall the way it did, seeing some overnight trading. I think those are fake trading numbers. I would take those with the utmost grain of salt in terms of Robinhood's overnight trading. But nevertheless, it was very clear from last night, about 24 hours ago, that today was going to be a red day, right? And we did bounce back a little bit. So as you can see here, this morning, S&P 500 opens. I mean, this is the pre-market for SPY, which is S&P 500 ETF, and it was just a straight downfall. But the bottom ultimately wound up being around 8:30. Then we rallied into the open, rallied in the first half of the day, and then trailed off a bit. And now we're bouncing back a little in the after hours, right? But supposedly, I don't follow this stuff too closely. There's about to be bombings between the Middle East and Iran attacking Israel or whatever the case, right? I don't know. I'm not going to get into all that. I don't know, foreign affairs expert. But what I do know is that impacts global markets, and that is somewhat a factor of what's going on right now. But to me, the main factor is, and I think it's pretty widely agreed upon, is what this stream is called. What is the yen carry trade unwind? Like, why is everybody talking about the yen carry trade unwinding? What does this mean? Why is it happening? Why now? What's next? So much to go talk about, right? And this meme, you gotta start the stream with a good meme, right? Accurate. 4 monitors, 6 brokerage account, 15 stock forums, 40, 50 trades a day, down 60% today. Been dollar cost averaging into SPY for the past 12 years. Has no idea what's happening in the market because it hasn't checked portfolio in a decade. And that's the way to go, right? Dollar cost average, because at the end of the day, I don't think anybody knows what's going to happen in the short term. So the best thing you can do is just accumulate for the long term, right? That's my personal opinion in terms of the best way to go about things. Of course, make your own opinions at the end of the day and own individual decisions. However, this is the time to accumulate when stocks are falling. Not necessarily right now. It's very fair to say that the markets could fall significantly more, because when you zoom out, this really still, and this is a 5-year chart, right? This still is really a pretty relatively small decline. And then even like 1 year, still positive. Even year to date, the market's still positive, right? But I think regardless of whether you're bullish or bearish right now, I think one thing that could be agreed upon for the remainder of 2024 is there will be volatility ahead. I mean, we have global affairs heating up. We have wars. We have a huge election coming up in the United States. A lot of different factors right now, and just things that are driving the market back and forwards. Not to mention all the derivative exposure, and we'll get a little bit into that in terms of the yen carry trade. Excuse me, water right off the bat, but I don't know about you guys, but I'm sick of living through historic events lately. It's like every day there's a new historic event. It's crazy. It's a crazy time in history. Well, it's currently the present, not quite the history yet, but I think you guys get what I'm trying to say here. So let's make sure we get situated. Say hi to the chat real quick. Hope everybody's doing well. Props Setron for doing a stream. Keep it up. Scott, thank you for being here. Hope you're doing well. Yeah, I'm trying to just figure out everything in real time, just like everyone else. Same time at work today, all day. I'm like, what is this yen carry trade? Why is everybody talking about this? Busy day out there. Spent my hours working on the vineyard. Sleeping easy tonight on a metric shit ton of GME. Negative beta and no debt makes me very confident. Scott, yeah, we'll get a little bit to that later, where I feel like it's good for GameStop, what's happening with the markets, right? But we'll talk about that in a bit. Michael Venti, hope you're doing well. Thanks for being here because I can. What's up? What's up? But yeah, I mean, this is so accurate. Dollar cost averaging is the simplest approach. And when stocks are declining, that's a great time to start dollar cost averaging, right? But again, make your own decisions. And then this just fresh off the press. I saw Dell Technologies reportedly lay off thousands of employees with estimates as high as 12,500. So that's a whole lot. Just not another good sign in the economy. Doesn't help with the unemployment rate, right? Like, that's definitely also a minor factor right now. And then this is definitely worth talking about. Charles Schwab, Fidelity, E-Trade, Robinhood, pretty much the most major brokers have all these outages right as the market opens. And my comment on this was, these types of issues always seem to happen whenever the markets drop sharply. How have they not figured this stuff out by now? Or do they choose not to? I don't know. One could argue they choose not to, right? Because it just seems like this is the new normal. It's just be kind of, oh yeah, like there's a lot going on in the markets right now. Oh, the brokers are overwhelmed. How? How? They have so much money. They understand their clientele. They go through the same situations, and yet they're not prepared for it. It just doesn't add up. Why that is the case is arguable. Some say, they don't want people to panic sell. Some say it's all just numbers on the screen, right? Which I kind of think it is at the end of the day, right? And the markets just can't function in certain periods of time. I don't know. There's lots of confusion, but every time these outages happen, trading platforms promise to fix the issue, and then the same exact outage happens the very next time volatility returns. Exactly. Users still cannot place trades 30 minutes after they open. So I bought a little bit of stuff in the pre-market. I bought a little bit of Palantir. Very thankful. It worked out very well. And a share of GameStop. Again, we're very thankful for that. I got a great price on it, but I didn't have any issues with Fidelity, maybe because it was in the pre-market. When the market opened, I was at work and I really didn't. I was watching like from a distance, right? Because I'm trying to focus on my job, and it's tough, especially when the markets are moving like this. As someone who's very interested in it, I'm like, all right, I'm trying to get my work done, but also I really want to know what's happening in the markets right now because this is truly a unique time, right? And it was one of those like, as I was saying in the beginning of the stream, from last night, you just knew that Monday was going to be spicy. You were going to have all kinds of different things going on, right? But also, I just want to take a moment to say it's important to zoom out and just understand that this is just one single trading day, right? Like things could go way back up, things could go down a lot more. So it's very easy to have like a quick opinion. Oh, this is definitely what's happening. Like suddenly everybody is an expert on things when they come up big, right? But you have to really let things digest and just kind of see how things shake out. Like I was saying, we have an election coming up. We have foreign affairs that are heating up. We have currency crisis. We have endless money printing. Is the Fed going to cut rates? Is the Japanese, their version of the Federal Reserve, based Bank of Japan, that is, going to have to cut rates? Like, because keep in mind, they just raised rates last week, and look what happened. Just a minor raising of rates, right? It's absolutely ludicrous. So, brother, it's on purpose. Deadhead, thanks for being here. Love your name. But yeah, I think so, man. I think so. I mean, it just doesn't add up how it always happens now. Ever since first January 2021 was unprecedented. Everyone's like, what is going on? GameStop, meme stocks, oh my gosh. And then okay, that's a one-time thing, right? And now just every so often, oh well, there's just mechanics. Oh, we'll fix this issue. We're not sure why this happened. Out of nowhere, it's like, what is this? It's all about the fugazi. It's fugazi. It's a wazi. It's a woozy. It's not even real. It's all just numbers on the screen, right? And that's really what derivatives are. And Wendy, thank you for being here. Hope you're doing well. Yeah, it's really mind-boggling when you dig into it, right? And a lot of people that have been following GameStop and dug into the whole GameStop story have been kind of saying this is going to happen for a long time, and now it is, and it's like, whoa. But again, it's just one single day. Like, there's no clear, like, okay, like the markets are just crashing. This is it. It could get a lot worse, but it also could be just looked at as a blip on the radar in hindsight, right? So I'm just saying, like, you have to kind of feel it out in real time and just let things progress and see how it all shakes out. But the outages, just not acceptable, right? So, plain and simple, just not acceptable, if you ask me. And I really want to get into, I'll get into some GameStop stuff a little bit later on, but right now I really want to get into the yen carry trade because I was reading about it right before the stream. I want to make sure I can explain it as best as possible. I think this thread by Kiyosabi Letter, I will show you guys their stuff because I feel like they do a good job presenting what's going on in the markets in real time, and pretty much briefly explains the yen carry trade and why did it cause a market downturn. In a nutshell, a lot of investors have been borrowing the yen or going to the Bank of Japan and saying, okay, I'll borrow. Sure, I'll take a loan. That interest rate is so favorable. And then they convert it to US dollars and they buy either US equities or they can go ahead and put it in a high yield savings or a United States Treasury bill, and they're getting a much better rate of return. The only thing they really have to worry about is the conversion rate, right? And for a long time, the yen hasn't, when you look at a long term basis, the yen has always been, because it's the debt to GDP for Japan is always like 200 plus, 300 plus percent. Really, they've kind of been in a stagflation state, essentially meaning that the yen has not really ever appreciated in value against the US dollar. Now that it has, right, it's been steadily appreciating. What we saw today is it obviously has sharply dropped off. So when the yen is dropping off, that hurts the conversion rate, and then the trade starts to unwind, right? Because the collateral on the other side is not doing so well. So the answer to this question is the yen carry trade, a term you'll probably hear many times this week. So what exactly is the yen carry trade and why did it cause a market downturn? A thread to explain. It all started after the Bank of Japan decided to raise rates at their most recent meeting. The Bank of Japan raised rates to 0.25% in their second rate hike since 2007, effectively ending negative rate policy. So if you weren't aware, Japan used to have a negative federal interest rate. For years, traders took advantage of these ultra low rates. So, again, not just days, months, years, this has been going on now, especially when the United States and Bank of Europe basically started to raise their rates. Investors are, oh, well, if I'm going to borrow money, it probably makes more sense to borrow it in Japan, get the yen, and then just convert it to the dollar. And then, really, the biggest risk is the currency conversion at a later point. So the yen carry trade explained. For years, investors would borrow the yen at ultra lows, such as 0.4%, and then use the yen as a form of leverage. Investors could convert these yen to US dollars or other currencies and get almost free margin. Low rates made this possible. So investors borrow the yen at 0.4%, so they get 10 million yen. They have to repay 10.04 yen, and then they would earn 10.5, and they earn a 460,000 yen profit over 360 days, $120 a day, or 120 yen a day. But moving on here, the widespread between rapidly rising rates in the US and other countries and negative rates in Japan made it possible. However, as the Bank of Japan began raising rates, this resulted in an unwinding of the carry trade, especially as rate cuts are beginning in the US and EU. As a result, the Japanese yen strengthened, and the US dollar and Japanese yen currency pair just hit its lowest level since 2023. So it was going up and up and up and up, and now it finally just started crashing down very aggressively. You now receive 142 yen for every US dollar compared to 160 yen for every US dollar a week ago. But here's why this is the key point. So as you can see, the Japanese yen strengthens to its strongest level since December 2023 as Bank of Japan raises rates. So basically it was weakening, and then all of a sudden now, since they raised rates, it started strengthening again. As the yen strengthens, many of these yen carry trades are being margin called, right? Suddenly the era of free yen loans is coming to an end. Essentially, the rate was nothing. Suddenly the era of free yen loans coming to an end. As these margin loans are called, the underlying assets are being sold and crashing equity markets. The carry trade is unwinding. The solution to this problem is not as simple as it may seem and may require a separate thread. It's a vastly different situation than previous market downturns. For now, we are trading the volatility. I think regardless of how you feel bullish or bearish right now, and I think there's general bearish sentiment across the market, but regardless, I think volatility is here to stay. Just with the politics right now, global affairs heating up in terms of wars, and just the money printers are just going to turn on more if there's war and just more issues taking place, right? And it's like some are saying, just what they're saying, not me. The Fed can't save us this time, right? Because if you just print aggressively, or they just come in and just decide to cut rates, then inflation's going to come raging back, right? So if they were to just aggressively start cutting rates, right, the U.S. Federal Reserve, that is, then inflation's going to come back. But if they don't cut rates, things don't look so good either, right? Because unemployment's rising. So we'll see what happens, right? That's all I can really say. We'll see what happens. But this person also wrote a pretty good thread on it. It seems unintuitive that a small 25 basis point interest rate hike in Japan would spike all risk assets, including tonight's negative 20% Ethereum candle. So if you weren't aware, Ethereum dropped 20% in a 5-minute span yesterday. To me, that just seems crazy, but when you read this, it makes a little bit more sense. But also just kind of exemplifies a lot of the uncertainty right now and just crazy things that are happening out of nowhere. And it's one of those, like, you always like kind of hope for this dip, right? Where you're like, oh, I really want everything to dip. I would love to buy. And then it happens and you're like, wow, that's a big drop. I don't know if I should buy. Everybody is like dying for a dip to buy. Then the dip happens. Like, I don't know. Actually, it could go down more, right? So my thought process is buy a little, then buy a little more, then buy a little more, and then buy a little more. Essentially, dollar cost averaging. The quick explanation of the carry trade is to borrow at a zero rate and invest in something with a higher than zero expected returns. Borrow the yen for nothing, buy an asset outside Japan that yields more than nothing. Step 3, question marks for profit. So three is, what are you going to invest in, right? Some are doing US equities, such as tech stocks have just done very well consistently. And then even if you didn't want to go on that side of the trade, you wanted to be like more risk free, you could just buy T-bills or short-term marketable securities and earn a better rate than essentially zero, right? That the yen was offering for so long in terms of borrowing. So the same behavior happened during the ZERP era. Take a margin loan out against equities at 2% variable rate and buy an Airbnb with it that yields 7%. 7 minus 2 equals 5% of free money, right? Right? I bought an Airbnb on a variable rate margin loan against my startup equity. There's no way all of that's correlated, right? Right? Well, yes, so long as your borrow rate remains low, your collateral's worth something, and the thing you bought with your loan makes money. All those things becoming not true for the carry traders. You think about it, the rate just went up, collateral just fell, and the thing that you bought ain't making money if everything's falling. First rates, the Bank of Japan is being forced into tighter monetary policy to protect Japanese people suffering under inflation. The same killer the Fed was forced to confront when it raised rates at a historic pace from 2022 to 2023. And I feel like the Fed waited too long to hike rates, and now some could argue they're waiting too long to cut rates, right? But at the end of the day, the Fed is really in a pickle. No matter what they do right now, because of how inflated our currencies become, I feel like there's no good solution, right? That's just my take. And an already weak yen was making it hard for Japanese to buy foreign goods, a very tough spot to be in for a resource poor country that imports most of their goods. So this is a big factor right here, and I think an underrated part of this thread, that because there are a lot of imports, the exchange rate is very essential to maybe the average Japanese person, right? Maybe not going and doing global trade, but the vendors are in some sense, right? Or whether directly or indirectly, and then they have to raise their prices because of the currency conversion. So in order to combat inflation, the Bank of Japan raised rates. Recall that interest rates are the price of borrowing money, so if you want less money in circulation, you raise the price of creating money. To carry the borrowing yen in order to buy foreign assets, this is that they own foreign currency denominated assets against yen denominated loans. So for someone who owes yen and owns US dollar denominated assets, the yen versus the dollar going down is good. The dollar versus the yen, or dollar to yen going up, is bad. Interest rates exert upward pressure on the yen's value. First of all, they create direct demand for more yen because now the yield on yen has gone up, strengthening the currency because more people want to buy and hold it. Second, it increases the cost to borrow. Higher borrowing costs equals less yen borrowed, equals less supply, equal more upward pressure on the yen. As a result, the yen has been spiked in value, and the inverse measure, US dollar to yen, has fallen dramatically from a high of 162 to 145. So you used to get, for every one US dollar, you would get 162 yen. And now every one US dollar, you only get 145. And because the yen is so much stronger, anyone who's borrowing yen now owes 10% more in US dollar terms just over the last few weeks. So it's a double whammy for yen borrowers. Your loan outstanding is higher and your interest rate is higher. The result caused some traders to sell their assets and repurchase yen in order to pay back their loans. But that buy pressure against the yen sends it up further, which forces more buying, resulting in a liquidation cascade. So as you can see, it's kind of like a snowball effect. And the snowball got really big, really fast. It's like literally just over the past week. And it's like kind of went unnoticed. It started a little bit last week when you look at the markets, but really just over the weekend. And a lot of times, right, when you look back at history, it's always been like over a weekend where all this craziness starts to shake out. It's funny, in crypto, we see these reflective dynamics play out over and over again. This is basically how Terra got unwound. We were born into reflexivity. Everything goes great in one direction, yen cheaper, I'm richer, and awful in the opposite. Now we see how over the skis the carry traders were. It seems folks were making a bet that interest rates would stay at zero forever and that the US dollar to yen would skyrocket, making the yen worthless, and the Bank of Japan was willing to enact even more pain on the Japanese consumer. And if that's the case, we might not even be close to the end of forced selling. That's the way these cascades go. Only folks with horrible risk management get liquidated first, but the building snowball eventually eats up anyone on the wrong side. Very important part of the thread here as well, because the snowball is still rolling, right? So how big is the snowball going to get? I don't know. I couldn't tell you, but it certainly could get bigger because when you get liquidated, it's because your margin called. So if you were already like teetering on the edge coming into this week, you got margin called today, right? Or you got liquidated, whatever the case. But if you were playing cautiously and smart, you might look say like, "Damn, that was scary." But as long as it gets better, I'm be good on my trade, right? And it might not just be me as an individual; it might be institutions, and this is scaled up massively to millions and billions and even trillions of dollars, right? Considering how large the derivative markets are. So, with that being said, how big is the snowball? When does the snowball like hit a rock and break and then it's done? I don't know. I couldn't tell you, and I don't think anybody can. So if things do get worse, more people get liquidated, and it's kind of a self-fulfilling prophecy. This is why risk assets are taking a tumble. The hidden leverage in the system was infinite money glitch that was Japan's monetary policy. The Bank of Japan was the piggy bank for the world's assets, but the piggy bank just closed, and now pain. And yeah, I think this was very, very well written. I mean, this is a crypto dude. I'm not too familiar with it. Maybe you guys know him, but this one really was very clear to me and I think was very informative. So we'll see what happens next, though. And Annie, hope you're doing well. Thanks for being here. Appreciate you popping in. Also noteworthy, Robinhood shut down 24-hour trading last night. Scum. They are scum. But yes, no, you're absolutely right. They did. And I saw that. It was one of those, like, I really try not to look at my phone when I wake up in the middle of the night. Sometimes I wake up, and it was like last night I knew. I was like, the markets, all kind of crazy stuff is happening. I'm like, what's the latest? And the yen had gone down even, sorry, not the yen, the Japanese markets had gone down even further since I went to sleep, and I was like, holy shit. And then I was like, Robinhood is suspended 24-hour. It was like a post. It was like 10 minutes ago. Robinhood is suspended overnight trading. And I was like, and this was like, I don't know, like 3 a.m. for me. I was like, oh, I'm going back to bed. I was like, I gotta wake up in the morning and start reading about all this. This is a crazy time right now. But here's another one. I think at this point it's pretty well explained, but essentially the yen was just being used to borrow, 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 and then invest, invest, invest in all kinds of assets, right? And now it's like, oh, can't borrow anymore. Sorry, we're not gonna let you borrow for nothing. And that's just one minor rate hike. What if they were to hike the rates again? I don't think they will after this. Already after yesterday, the Japanese markets are the Bank of Japan and the officials running Japan. I don't know, prime minister or whoever, whatever their exact government structure is. Basically, they're like, all right, we're going to talk about this. And I think the Fed, if I'm not mistaken, had some kind of closed door meeting as well today, just talking about some of the things going on and not that they're coming out with an emergency rate hike or anything. And I did put out a poll actually this morning because, everything's happening quick, fresh, and like opinions change fast when that happens, right? And mine already changed since I put this post out. And this was my reaction seeing everything. I'm like, the VIX is at the highest level since 2020, and the only other highest level is 2008. That's crazy. So that's worth noting. Today was the third highest reading on the VIX ever. Could it go higher? Maybe. Likely it'll drop off, but doesn't mean the market won't go down, right? But I said, do you think the Fed will do an emergency rate cut? 71 voted, 66% no. And for me, in hindsight here, I think no. I think that would be very sudden and it would alarm a lot of people. I think it would just create more panic in the markets and also just create more inflation. And I think shout out Negative Banana brought up a good point. So let's see the job report gives us. If it's bad, then maybe. And then Timely says it will be. Point 0.3 is bad. Something like 0.6 will cause an emergency meeting, but then it's too late. And I said, good point. Plus, an emergency rate cut would likely just create more panic. That's what I started thinking in hindsight. And it was one of those in the moment. I'm like, could this happen? I don't know, because that's what happened in 2020, right? The only keeping this market together is AI is super cool and jobs market's still strong. Everything else is shit, and the jobs market is weakening right now, right? So we'll see. Everything else is shit. AI, and also some would argue that the jobs market has been appearing stronger than it actually is due to a lot of people getting a second job because of how high the cost of living is for the average person these days. I see, I feel like correction's overdue. I'm mentally ready for everything and anything. And I think you guys should be too. You should always be ready mentally for any possible scenario, for markets to start going up a lot, markets to start going down a lot. You don't truly know at the end of the day what's going to happen in the short term. Holding your Bitcoin tight, I'll be buying the 27. If not, I'll pass. Oh, I didn't even see that. I'll respect it. Oh, let's see. This is my buddy. Oh, no, it's a spam one. I'll say my buddy who likes to comment something negative on like literally anything I put out, but that's all right. He's still a fan, right? So and then we'll see, right, what happens with the Japanese markets overnight, and it'll kind of give us a little of an indication tomorrow. And we'll also get an idea with futures. I mean, you could also get an idea right now with the S&P and overnight trading. So we had a little jump, as soon as the market closed, and it's kind of been trending upwards. But I would take this with the utmost grain of salt. We could be right back down here tomorrow. But by the same token, like, we could be way up here tomorrow. That's the craziness of this market, that nobody truly knows. So how it shakes out from here, I don't think anybody could really tell you, but I think you should be very cautious in that, just reading about what the yen carry trade is and how it's unwinding. It can continue to unwind. It's not like it just happened, it's done, everything's unwound. Like this has been something that's been accumulating for years and years and years. And I think really the snowball started getting a lot bigger once it got to be 2022 and 2023 when the Fed started raising rates. So as the Fed started raising rates, it became more and more attractive to go borrow the yen, convert it to the dollar, and then either invest in safe US securities, right, such as treasury bills, or if you want to be more aggressive, invest in the S&P 500, invest in Nvidia, invest in Apple. If you invested in pretty much any big tech stock with your borrowings from the yen over the past couple of years, you've made out very well until now all of a sudden the whole trade is turning around on you just like that. And it's one of those where it's like you might think, oh, well, the people who are investing all this money, right? These institutions, they know better than to make these mistakes, right? Or over leverage themselves, right? But then you look at 2008, you look at 2000, and you look at how big the derivatives market has accumulated since 2000, and you learn about Federal delivers, and you learn that it's really just numbers on a screen at the end of the day. And it's truly scary because while I think this will be good for GameStop in that I think those betting against GameStop are leveraging their long positions against shorting it. So that's essentially their collateral. And then also, so which could cause a potential short squeeze of some kind. To what magnitude, I'll leave you to determine. But then beyond that, like they have $4 billion in cash on their balance sheet. So if everything's crashing in terms of valuations, they'll be ready to make an acquisition. But again, we'll see what happens with that. I expect a lot more volatility from GameStop because it is a risk asset. I mean, maybe your opinion of that could vary, but generally speaking, right? Like it is considered like a risk adverse asset. But really, a big thing to watch right now is the dollar versus the yen. And does the Bank of Japan come out and say, damn, this is so bad for our economy that, yeah, we really don't want to cut rates again to like hurt the consumer? But if it's the whole economy getting screwed, like, I don't know, it's tough. They're in a really tough spot, right? And that's what the Fed is heading towards. That's the most crazy part to me, the most alarming part, that this is what the United States is heading towards. Because what are we at right now? Roughly 130% total debt to GDP. Japan's at what? 250, 300%. I forget the exact number off the top of my head, but they're past the point of no return. Once you get to the point where your total debt outstanding as a country is double what your GDP is, excuse me, there's really no going back, right? Like there's no turning back. And beyond that, right? It's not like the United States right now is taking measures like, oh, we better be cautious, right? We're spending more money than ever, and when there's war, there's more money to be spent, right? The most messed up thing to me about the whole world of finance is that war is profitable. So basically, people dying is profitable, right? That sounds very harsh, and it's more in depth than that, but war is good for business, and that is a terrible, terrible thing. And my point being, I don't, you know what I'm saying? Like, it just seems like these wars are being escalated right now, and like, I don't know, I'm talking out of my expertise here, right? But it's just like forever wars make companies such as Lockheed Martin, which was perfectly fine today, right? Lots of money. So it's a messed up thing that happens, and it's a messed up world, right? But again, I feel like I'm going outside of my expertise here. But point being, what's happening right now worldwide and the fact that the interest rates are so high and that our debt is accumulating so much that I think it's like last month, roughly 70 to 75% of taxpayer dollars went just to interest payments on our debt. Never mind all the money we're spending on our military, Social Security, and various other things. So it's not like government spending is going down. Government spending is increasing, which means that debt is just increasing faster. And on top of it, the interest rates are higher right now at which the new debt is being issued to pay off old debt. So the snowball of the United States debt is just getting bigger and bigger and bigger. Like, this is a serious problem. And this is also why I personally believe in Bitcoin, because we literally need it, right? I literally think we need it because nobody can go in and just print more Bitcoin and create it. So, I mean, this is the market cap, but Bitcoin, maybe I have to do crypto. That's why. Just give me Bitcoin US dollar. So, again, this drop off feels harsh. Oh, this is a 1 day. Sorry. This drop off feels harsh, but when you zoom out, it's still accumulated in price and valuation, just very much so since this 1 year period, since the start of the year. And if you don't have any Bitcoin, or you've been on the sideline waiting to enter, maybe now's the time. Although it is worth noting that if this snowball does continue to grow and the situation with Japan gets worse, Bitcoin is still a risk adverse asset right now. But you know who I bet, and not financial advice, go do your own research on this and due diligence. But you know who I bet is accumulating Bitcoin right now? BlackRock, Vanguard, State Street, all the big dogs. Historically speaking, large, massive institutions have always accumulated assets as they're falling, right? So I would be, and I know BlackRock is, right? Because they have the Bitcoin ETF. And did you know that some of BlackRock's most major mutual funds, largest funds, basically were amended to say like we may add alternative asset classes such as the Bitcoin ETF, right? I'm paraphrasing, but essentially they could have a massive mutual fund containing stocks, bonds, or one or the other, or whatever the case. It's like a mix of assets, and they might make 1% of it the Bitcoin ETF. So that leads to inflows into Bitcoin. Meanwhile, maybe the average individual is panic selling their Bitcoin, or they need to sell Bitcoin for cost of living, whatever the individual's case is. I feel like institutions are going to be gobbling up Bitcoin right now. Of course, I could be wrong. Do your own due diligence on that, but I just feel like Bitcoin is really I know it was created because of what happened in 2008, right? So, when you see what happened in 2008 and you realize it's like that was the doing of poor policymaking and poor decision making. And now's a great time to go back and watch The Big Short if you have only once. I've seen it so many times at this point. I could pretty much tell you like line for line that movie, and like just watching the clips, they just make more and more sense when all this craziness happens, right? But the situation from 2008, the same type of thing is happening again. It's not exactly the same. It's not like cookie cutter, like, oh, perfect fit. Oh, it's exactly the same, but it's the same concepts, the same issues, the same greed, the same type of nonsense just going on and on and on. And the unfortunate reality of it is, it doesn't seem like it's going to stop, right? It doesn't seem like anything's changing. And I just feel like if you want to hold your purchasing power, Bitcoin's the way to do it. Because when you look at Bitcoin on a long-term basis, right? Let's see. I found this website completely by accident, and I think it's pretty great. I mean, just from what I need it for. But you see the Bitcoin supply, right? So this is a 1 year chart. Bitcoin supply over a 1 year period went from 19.46 million to 9.74 million. Not a very large increase. Look at the dollar over that same period of time, right? It's gone up trillions of dollars. I think it's about $1 or $2 trillion of debt outstanding has gone out existing. So, or sorry, of dollars existing, right? But then look on a long-term basis of the Bitcoin chart. So as you see in the beginning, the circulating supply was rapidly increasing and then it trailed off. This chart, and because of the nature of what a Bitcoin halving is, the supply of Bitcoin is inverse exponential, meaning it's initial, because like a normal like if I do a quick paint chart, right? You know how a normal exponential chart is, right? It's like up and 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 up, and then all of a sudden, right? That's a normal exponential chart. Whereas an inverse exponential is up and up and up and up and up and up and up, and then trails off, slows down, and then basically is going up slowly that it's basically sideways at the end, right? So this is an invert. So this is an exponential chart. This is an inverse exponential, right? It's the opposite. And that's what the Bitcoin supply is. It's an inverse exponential chart. So with that being the case, as the dollar is being printed more and more aggressively, right? Exponentially, because as the snowball gets bigger, you need to print more and more money. Then on the other side of the coin, you have Bitcoin being created slower and slower. And that's why the halving is so significant, because it means half as much Bitcoin is being created daily than the previous cycle. So It really just doesn't, like, there's no situation where every individual can just go out there, or entity or whoever, right, that just is in charge, you could say. It's like, we're going to print more Bitcoin. You just simply can't do that. You just simply are unable to do that. So we'll see what happens. Again, make your own decision, do your own due diligence. Don't just listen to me say I like Bitcoin. Go, oh, that means I should buy Bitcoin. No, never ever do that with me. Never ever do that with anybody else on the internet. You always have to do your research and wrap your head around it. But then also, what I think makes it so incredible is you could send it, anywhere in the world to different individuals, and the fees of the network is going to be cheaper than sending it internationally through what's that thing that people usually use? Um, I forget right now, but just basically relative to any other international method of transfer, it usually has a lot of costs associated. So sending it through network is more efficient. Not to mention that when you look at Bitcoin, it's infinitely divisible, meaning doesn't matter how high Bitcoin goes, you can always cut it up to another decimal point. So right now, 0.0001 Bitcoin is such a small amount, but one day 0.0001 Bitcoin might be seen as a lot. And then all you got to do, if you want to send half to someone, now it's 0.000005, right? You just add an extra zero in there. So it's infinitely divisible. So you can always cut it up, and it's because it's not physical, it's digital, that it's infinitely divisible. You just add as many decimal places as needed, right? Because numbers are endless, essentially, right? When they are multiple decimal places. Like if you do a division problem of like a random number, right? Let's do like 4526 divided by 4775, right? See, in this point, it's 60.346666. Well, sometimes you have an infinite number, right? But I think you guys see what I'm trying to say here with the point. Or use a random number divided by. So you have an infinite number, right? And this isn't the whole answer. You could keep going with this decimal place, right? At some point, the calculator just cuts it off. But the point being, the number just keeps going. It's the same with Bitcoin. A rough example, but. And then, of course, got to ask my buddy ChatGPT, my little assistant here, also for a little explanation. And don't ever just blindly depend on this. AI is a great tool to get some general information. And then also what I'll do is a lot of times, like if I'm confused on something, like if this doesn't, I'm like, oh, this is confusing, right? Even with an emoji, I bet it can do it. I'll be like, explain, or like a lot of times too, I'll be like, grammar correct and improve, right? And then I'll paste like an email in, and that'll help me too, like at work or day to day or whatever the case, just to, I'm like, oh, I didn't think of putting it like that. Oh, actually, I won't copy and paste this exactly, but I'll tweak this part of the email because I didn't think about it in that way. But if I have right here, this is just like confusing, I don't understand this, explain in super simple terms. Now let's see if it gets it. I mean, this is a very specific part of it. So carry traders borrow the Japanese yen because it's cheap to borrow, and they use it to buy assets in other currencies like the US dollars. But here's why this is risky. Borrowing yen and buying US dollars, they owe money in yen but have their investments in dollars. If the yen weakens, if the yen becomes weaker to the dollar, it takes fewer dollars to pay back the same amount of yen. This makes them happy. Smiley face. If the yen strengthens, which is what's happened right now because they raised rates, if the yen becomes stronger compared to the dollar, it takes more dollars to pay back the same amount of yen, and this makes them sad. In simple terms, weaker yen, good. Stronger yen, bad. And as we can see, the yen is falling off, and then right now it's recovering a little bit, but again, it's very, like right now it feels like every little movement is so massive, but we got to zoom out and just look at the big picture. Like what's really going to happen over the next several months? That's what I'm really trying to focus on. And I'm not here to tell you exactly what's going to happen because I don't know. I truly don't think anybody does. Fine song, what's up? What's up? Thanks for being here. And yeah, because I can, great point. Japan can't hold US debt no longer. Exactly, that's the thing too. They're one of the most massive holders of US debt. That is also worth noting. Tetra, I understand that U.S. assets would still have given unwinding, but wouldn't the U.S. dollar yen converse because Japanese assets to increase in value? Why is the Japanese market crashing? I think it's one of those. See, Ted, your name just makes me laugh. That's the part I'm still trying to wrap my head on a little bit, but I think it's a matter of just it's all global assets have been invested in, right? Because maybe also, right, some Japanese investors have borrowed the yen and invested in Japanese equities as well for the same reason that the yen is pretty much free to borrow, right? The risk-free rate is essentially zero. So it's like, okay, I'm going to earn a better return in the Japanese market rather than just having my cash in cash, I guess, or yen doing nothing. But I would have to look a little bit deeper into that to give you a more specific answer. Abnormalities seem normal nowadays. We're also jaded and desensitized to this BS. Ryan Sung, spot on, brother, spot on. I totally agree. Where it's like this stuff happens in a minor way over and over again, and then people say, "Oh yeah, the brokers are having glitches again. It's just normal. It's just an average day, right? Just another day in the stock market." Meanwhile, it's like that's not normal. Pre 2021, that never ever ever happened, right? And these companies, these brokerages, they've made so much money over these past few years, right? Ever since post 2021, there are more people investing and trading in the markets than ever. And how do they make their money? Per trade, right? Because of payment for order flow. Yes, oh yeah, every trade is free, right? That's great. We don't charge commission anymore. That's what they said in 2018. But then it became all about payment for order flow. Then there's a whole nother conversation about certain institutions and companies that have two branches of business that are not affiliated, right? That are a market maker and then also an institution. So see how it all shakes out. Sergio, what's up? What's up? Thanks for being here. Hope you're doing well. Thinking of watching the Margin Call tonight. Haven't watched that one yet. Ryan, that was a movie I also haven't watched, and I want to watch it. I've only seen clips of it, but somehow I've never seen it. I might have to watch that too. I don't know about tonight, but I'm gonna add that to my to-do list. Watch Margin Call. That's the thing too, guys. I'm really trying to get better at writing stuff down and taking notes and just building upon my knowledge, right? And I've done that with GameStop here, and I'm starting to do it with Bitcoin. And this is, Michael Saylor's aggressive chart. And this is a conversation for another day, but I find it concerning that Coinbase is, see, they literally boast about this. Coinbase is proud to be the trusted partner and custodian of powering 10 of 11 spot Bitcoin ETFs and 8 of 9 Ethereum ETFs. Only VanEck, the VanEck Bitcoin ETF and the VanEck Ethereum ETF, use Gemini as their custodian to hold their Bitcoin, meaning when people are buying the ETF, they actually hold the physical token relative to what the ETF is, whether it's Bitcoin or Ethereum. They hold it within Coinbase. All of them except VanEck. VanEck uses Gemini. But where I find this concerning with Coinbase, it's like they brag about it, like, oh yeah, we're the most trusted, everybody uses us. But it's like, what if something happens to Coinbase? That is huge exposure, right? Or that's a huge, huge issue. And it's essentially making it centralized in a way. It's, to me, the best way to own digital currency in any way or any shape or form, any currency, is to have a cold wallet, right? Digital storage. I have mine right here. I got this one a while back. It's worked out pretty well for me. The LA Titan Mini, and how it works, if you're not familiar, is a cold wallet. It's never ever connected to the internet. You create the wallet on here, and you transfer your currency to it like you use an exchange dollars for coins, whether it's Bitcoin or Ethereum, Solana, whatever you're interested in. And then you transfer it here to this offline wallet. So nobody can ever truly hack it. Like, yes, you can use MetaMask or any of those, but it's in your browser. If somebody hacks your computer, you could be exposed to it, right? So to me, the best way to own cryptocurrency, and for me personally, those that know me know I'm pretty much about 90% Bitcoin, 10% Ethereum. I think now it's a little closer to maybe like 87% Bitcoin, 13% Ethereum, because I was actually buying some over this weekend a little bit, and I wish I waited a little longer, right? I did get a little bit last night, but I just so happened to buy some Saturday, thinking, it's been a while since I bought some Ethereum, and I've been wanting to accumulate it. I really started to understand their supply a lot better, and that was something holding me back. Like, I understood it, but now I feel like I get it more in depth, and then eventually also I need to build out a Ethereum canvas. But if you're not familiar with Bitcoin, I really suggest you start off by reading the OG Bitcoin white paper, just explaining exactly what it is, right? And we're not going to go into that now, but it's purely a peer-to-peer version of electronic cash that will allow online payments to be sent directly from one party to another without going through a financial institution. And some are saying now Satoshi Nakamoto is a CIA thing. I don't know, right? But whatever the case, like what it is, what the technology is, to me is truly unique, and I really do think we're going to need it in the future because the money printing is not going to stop, and the problems are just going to accumulate. So we're going to need a new world reserve currency, and that's really what the OG thesis of Bitcoin is, as a store of value, because the dollar is being endlessly printed, right? And basically, to me, the United States has abused their power for too long. of being the world reserve currency. Like, oh, well, the world reserve currency, we can just do this, we can just do that. But now it's catching up to us because we're just getting more and more and more debt. And then you have BRICS trying to create a currency. Not that I think they'll become successful per se, but it just kind of shows you what's happening, right? And here's another chart to show you what's happening. There's a 3.5 ratio from the median household income to the median sales price of a house. So it went from 22.4K in 1985 for the average income, and then the average house cost 78,200. So it was a 3.5 ratio. When you scale it up now, where we are today, the average household income is 74.6 thousand, and the average house price is 433,000. And as someone who's in a more expensive area and not like specific town, but just in a state that's more expensive, it's like this does not even feel accurate at all. The average near me, like in the state of New Jersey, is just definitely higher. So it's crazy. New York, is this whole area, honestly. So it's truly concerning, right? But read the Bitcoin white paper if you're curious about it. And anything that trips you up, doesn't make sense, throw it in ChatGPT, throw it in Microsoft Copilot, throw it in Google Gemini. I think that's what they call it. Throw it in one of the AIs and be like, explain in simple terms. Don't be like, summarize the Bitcoin white paper. No, ask it to explain to you in simple terms things you don't understand. And if I say, like, for example, here, right? If I'm still confused, explain, which I'm not, but just for the sake of the example, explain the borrowing portion in greater detail. So you can tell the like artificial intelligence like a next step. So here now it's going to give me even more specifics as to what I want to know, and then you could even say give me an example of how this would be done. And that to me is how you better yourself and keep learning, and a great way for the average individual to utilize artificial intelligence for their benefit, because this isn't like, oh yeah, do this for me or do that or write this up. It's more so, okay, explain this to me in simple terms. I'm still confused. Give me an example. Okay, what about this? And then if you're taking notes on all that and putting it in your own words, you can ultimately understand it. And that's why I want to try and do that, because then if I understand it well enough, I can explain it to you guys as the viewers, and I appreciate you guys very, very much. I really, really do. I love this journey. I'm meeting so many incredible people along the way, so shout out to you watching this. But I want to become an expert, and not expert like, oh yeah, I'm going to tell you how to make a gazillion dollars. I know everything. No, but like an expert in the sense that I know what I'm talking about to the greatest extent possible. And I feel like if you truly understand something, you can explain it. And I want to get to that point with anything I talk about, whether it's GameStop, Bitcoin, global economics. Like if you once you fully understand something and then you can explain it to someone, it's like you understand it even better if you're capable of explaining it to someone. And if you think back to in school, when someone's like stuck on something and then you explain it to them, you're like, oh wow, like I understand it even better now because I was able to articulate it in a way to someone who didn't know what it was before, right? So, gosh, thanks. It's interesting that Japanese market had a historic down day. U.S. market was down, but not nearly as bad. Also, Fidelity is the custodian of FBTC, the Fidelity Bitcoin ETFs. Good point. Thank you for bringing that up. So yeah, I guess that tweet is not entirely accurate by Coinbase. I did forget about that one, but point still being, most of the ETFs are through Coinbase, right? But that is what it is. And it's interesting, the Japanese market has historically bound day. It absolutely is, and I think it's just because the Japan economy is suffering, and maybe even part of it is pricing in the possibility of rate cuts coming because they just raised rates, and this minor rise in rates just caused this insane ripple effect. So who knows what the Bank of Japan is thinking, right? But it's these crowded trades hit by market sell-off, dollar weakens amid forecasts of Fed cuts as Bank of Japan tightens, yen jumps after Bank of Japan lifts rates. So you can see that's when it started 5 days ago, and it's just been accumulating ever since there. Why the yen carry trend unwind has further to go. Let's see what this article says. See if it's some nonsense. Hopefully not. Is it behind a paywall? It is. All right. Well, never mind then. But interbank loans to non-bank financial institutions, and you can see them just go up and up and up. Borrow, 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 right? Never learn the lesson. But also some other notes here. Though the market downturn distracted from the fact that inflation has been at or above 3% for 39 straight months, record number of Americans are working multiple jobs. 9% of credit card balances became delinquent over the last year. Housing market affordability is near record lows. Mortgage demand is at its lowest levels in 30 years. The US dollar has lost 25% of its purchasing power in 4 years. This alone is remarkable. This is not a soft landing. Couldn't agree more. Couldn't agree more. But you just gotta do what's best for you and prepare in every which way that you can. I think it's always good to have cash on the sidelines ready to go as things are going down. And then also, you should, in general, just have an emergency fund for anything that could pop up in your life, whether it be just some expense you don't see coming, or yeah, that's what an emergency fund is for, right? Any expense you don't see coming, whether it be medical or you lose your job, or God forbid, right? Something like that. So it's always good to have an emergency fund and have cash for that reason. Although, on the other side of tokens, like you always want to be investing because your dollar is losing purchasing power. But that's where I feel good about Bitcoin because, okay, well, nobody can create more Bitcoin, and the dollar and all the other world major currencies are just going to be created more and more aggressively. I feel all right holding my Bitcoin, right? So that's just me, though. Again, you got to decide what's best for you because that's kind of the way you fight against inflation. You want to own assets, but when the assets are essentially inflated by derivatives and just money flooding in, like that's concerning. So, BS when MOAS, WM, thank you for being here. I hear where you're coming from, but at the end of the day, you just got to ride out the journey, brother. You just got to enjoy the ride, keep learning along the way. I think that's really the best way to go about it. I have a buddy who pulled out a line of credit to buy Bitcoin at 65,000 before the halving. Motherfucker's down bad today. Yeah, Ryan. See, that's where it's tough, right? That's where it's like, I get it. The halving's exciting, but you got to, and I really thought Bitcoin would keep going up, right? And not to say this rally is done because it is still in a general uptrend, but if this is in fact like 73,794 is in fact the peak for this Bitcoin cycle and it just kind of stagnates, right? It drops off, then stagnates. And as you can see, historically, it's always kind of spiked around the time of the halving. This will be the most unique cycle yet, but the X factor would be that this is the most major recession, most likely, right? If Bitcoin does keep declining, because I think if everything else does recover and does continue to do well over the next year or so, I think Bitcoin will go to all-time highs. However, if it doesn't, I think Bitcoin will drop off a bit and then stagnate and then ultimately start climbing up again before the next halving. Although it would depend on global macroeconomic conditions, and that will continue to be the case. And that is right now the X factor as to why it's dramatically dropping. So just some food for thought there. Crazy home prices make people do crazy things. Yeah, no, it's true. It's true. And as someone who wants to ultimately buy a house one day, like it is stressful. Like I kind of want the market to crash so I can get the best possible price. But at the end of the day, nobody knows what's going to happen in the short term. So when I'm ready, I'll just move forward at that time. I will look at the factor of the market a little bit, but it'll mostly just be when I'm financially ready, which right now I am not. I'm just rocking and rolling, chugging along. But I can tell you, as a young individual, it does kind of feel impossible sometimes. Like I know I'm not going to stop until I get the house and get to where I want to be, and I'm going to keep grinding, and it's going to be tough. I'm like mentally ready for that, but it's still like it feels impossible sometimes, right? When you look at it, you're like, damn, that's a lot of payments. It's crazy. I was being cheeky. Totally agree with all that you said. Oh, WM, you're good, bro. I was gonna say I feel like I've seen you before. I was like, it's hard to sometimes. I'm checking the chat, trying to keep my train of thought going, and then I'm like, I can't tell when you guys are messing with me. But yeah, I was gonna say, I think I've seen you before talking positive GameStop. So waiting for GME to keep going down so I could buy more and lower my cost average. Sergio, that's the way to think, man. That's really the best way to think because at the end of the day, the lower it goes, the more you can accumulate. And you could say the all reliable Volkswagen. We are here. That chart that everybody shows. And then, but I don't think that's impossible, right? But let me be perfectly clear. I do think there's a good probability we don't see just a dramatic move upwards. But also there is because if there is in fact, right, and we'll transition to GameStop here a bit. If there is in fact a lot of leveraged short positions against GameStop, what are they using to leverage? Big tech stocks, the S&P, right? It's a lot to do with derivatives and swaps, and those start to blow up when all the other equities start to drop in value. So yes, GameStop's going to drop with it right now, but at what point does that switch? And if GameStop did actually go to $10 again, they're essentially looking at a situation where they have as much cash per share as they do the price per share. Not to mention with their assets included, about $14 or $15 per share in terms of like just assets outstanding. So one could argue it's undervalued, but again, make your own individual decisions. And if you were lucky enough to pick up a share this morning, you could have got it in as low as 1757. If you bought anything around 8:30 this morning, you made out very, very well. Although in the long term, we'll have to see. And I do want to get into Palantir a little bit. I'll do that right at the end of the stream before I wrap it up because I was fortunate enough to grab some right in here, very little bit. I do believe in the long term, and it's kind of just been going off. I'm like, I don't know. And then it dropped. I'm like, you know what? Earnings are today, and I feel like the earnings are going to be good. I wasn't trading about earnings, though. I want to be perfectly clear. Like, I'm still holding it, and I would have did the same thing either way. But the fact that there was earnings saying it was dropping off so much, I'm like, I feel like it wouldn't take like, even if their earnings are remotely good, like the stock is going to bounce back. And also, just if you told me like back here, right, like all throughout this run up, like you're going to have an opportunity to buy Palantir again, like near the low 20s, like, oh, I don't know, I feel like I missed it back here, but I don't know, unless we're in a hardcore market crash scenario. It's really hard to imagine Palantir below 15 again, but we'll have to see, right? Of course, anything could happen, but regardless, going back to GameStop here, there's the two factors to me that make a stock a pullback or recession good for GameStop. One is that they, if there are people betting against it, the leverage starts to go away, starts to blow up, could potentially put a lot of pressure on short sellers, right? But also remember, these short sellers have a lot of collateral. They have a lot of different ways because of their institutional capabilities, you could say, to shift things around and make things work and get the necessary collateral where it needs to be at the given point it needs to be there, if that makes sense. But the more these assets that are the collateral sell off and decline in value, the more probability it is that a swap or position of some kind blows up, and the most over leveraged one would blow up first and theoretically could create a domino effect. But of course, I'm not here to tell you that's definitely going to happen. I'm just saying hypothetically. But then even beyond that, right, just looking at the business fundamentally, with $4 billion in cash right now, the time to accumulate assets is in a market crash scenario. And the fact, and I really think, and I've kind of been saying this for a little while now, and I swear I was gonna make a video on this last week, and then I just got caught up with stuff, and I didn't, and it would have aged like fine wine over the past week, given that everything started crashing over the past 1 week period. But essentially, I want to make a video talking about, and I will, stay tuned for it, that Ryan Cohen said he speaks very rarely, but he spoke at the beginning of the investor day, the investor presentation day for GameStop, the annual meeting. Sorry, that's the word I'm looking for. He spoke at the beginning of the annual meeting. And at the beginning of the annual meeting, do you know what he said? He said this has been and paraphrasing here, an unprecedented time in terms of monetary and fiscal policy worldwide and aggressive rate hike. Well, basically just an unprecedented time and money flooding in the system and basically saying like, things are without saying things are so highly valued right now. We're going to be patient. That's how I received it, at least. And the fact that they haven't made an acquisition up until this point just tells me that's where their head is at currently. And with that, as valuations fall, maybe something becomes attractive for them to acquire. What exactly that could be is very arguable and very much to be determined. But I think if we do wind up in a market crash scenario, that's where GameStop goes out and makes an acquisition. And that's something I really do think they have to ultimately do one day. Like, simply the fundamental business is not cutting it. I mean, it's cutting it in the sense like they're breaking even operationally and they will earn a net profit on their interest income, like with their interest income included from their marketable securities. But as interest rates get cut, you lose your interest income. That's number one. And number two, at the end of the day, I keep saying the end of the day. It's one of those like, just stick certain phrases, just stick with you. But ultimately, they do want to accumulate, right? Revenue growth and get net revenue and net income growth back on track. So that's like really where they need to get to. So to do that, it seems like they're gonna have to make an acquisition and merge it with their business. A lot of ideas are like Newegg, a couple other ones. Of course, they're slipping my mind right now, but Newegg for computer parts. But also, I would think it's very possible they buy out a small company that's not publicly traded, that nobody's really that familiar with, and then they can integrate it within their GameStop brand, and then integrate in a way that makes whatever they acquire even more profitable, right? That would be ideal. But of course, we'll have to see how that shakes out. But I feel fine with GameStop heading into a market crash because while it may hurt their sales a little bit in terms of just the average consumer doing not as well, they're stacked on the balance sheet and they've shown they're going to just cut costs and do whatever they can to turn a profit, and they'll focus on making sure that the business is net profitable. And to me, that makes me feel all right in the midterm or interim term, whatever you want to call it, like as of right now. Because at the end of the day, I keep saying I can't stop saying at the end of the day now. Oh my gosh, almost said it again right there. But overall, what are they going to do with that cash? That's kind of what it really comes down to. And so long as they're just breaking even, chugging along, turning a small net profit, I'll be patient and I'll wait to see what they do to see how I really feel about it. I mean, I know how I feel for the long term, right? But I think that's kind of how it's going to shake out. And we'll see, though, right? We'll see. And I would expect, just like everything else, if other stocks can have volatility, you can bet your boots that GameStop's going to have volatility on it. So, and I like this post, market dumping, but don't worry, Ryan Cohen is over here with a pile of cash waiting to buy all the stocks. So that's something I also speculate. Maybe GameStop does start acquiring a position in a said stock or multiple stocks in a scenario where everything's dropping, right? And then maybe they become such a large shareholder, they get voting rights, and it's kind of almost like a hostile takeover type of thing, like Warren Icahn, or not Warren Icahn, oh my gosh, Carl Icahn, because I always see people like merging all the names, like Carl Icahn type of thing, because I was watching a documentary on him a while back, and that was his old style. Maybe that's why he took a picture with him a while back. I'm not sure, but the fact of the matter is GameStop does have $4 billion in cash ready to use if the market conditions do get worse and valuations fall further. And I'm telling you, Roaring Kitty has to be a time traveler, right? Roaring Kitty has to be a time traveler because I don't know who this account is, but he posted it, and it's kind of a good point. This is the beginning part of his live stream. It was under, or maybe it was his thumbnail. I think it was his thumbnail. It was under our nose the entire time. Guy in the bottom left is pointing to two major things: one green candle and two Japanese men panicking. Credit to a woman pointed this out in the call last night. I don't remember who. Pointing to the green candle going up, pointing to a group of Japanese people. I don't know if they're in fact Japanese. I guess maybe they are, but saying like it'll be the Japanese market panicking, causing GameStop to go up, causing the shorts to unravel. Theoretically, right? I would take that with the utmost grain of salt. Whenever you're trying to dissect Roaring Kitty's tweets or anything he's done, like, well, I joke around and say he's a time traveler, but like a small part of me legit thinks like this man might be. If there's someone on this earth who's a time traveler, it might just be him because he seems to perfectly time GameStop every single time and just understand the stock better than anyone else and its cycles and just what's happened, because how else has he accumulated all of this additional cash that he came back with after being what we thought in a hiatus for the past few years. But then all of a sudden it's like, nah, he's been doing stuff this whole time. How else would he have accumulated this money? So I feel like he's been selling covered calls because he just knows it better than anyone, but I don't know. I truly don't know, right? And then does he still have Chewy? I guess he does, because wouldn't he have to file if he sold Chewy? If I'm not mistaken. I don't know. Don't know. Or how did Chewy do today? And then also, side note, GameStop, our CEO, sued by Bed Bath & Beyond for insider trading. I think this is a load of baloney because pretty much saying, oh, made dozens of purchases and sales of BBY equity securities between January and August 2022, all of them profitable and most within a single period of less than 6 months. Profit of those trades recoverable, blah, blah. Acting through deputized members of the board because they beneficially own more than 10% of Bed Bath & Beyond's common stock. But to me, he came into the board. He had ideas how he wanted to change things. They didn't want to listen, so he said, all right, you don't want to listen? I'm out. That's how I see it, right? That's how I see it. That's very arguable. You can make your own decision at the end of the day. But I think it's just another bogus lawsuit to just drag his name through the mud further. But I was waiting for Jimmy to keep going down so I can buy more. That's what I think. Everything under Roaring Kitty buy is a good buy. Jusuf, thanks for being here. Hey, listen, at the end of the day, fuck, I can't stop saying at the end of the day. The beginning of the day, you got to do your own research. That's how I prefer to do my research and due diligence at the beginning of the day. You got to do your own due diligence. No matter how much you like a certain individual and value their opinion, you always have to do your own research and formulate your own opinion. Like, I truly, truly believe that. Larry Chang and DFE both bought recently around the 23-24 range. Very good point, Ryan. And yeah, not to mention Roaring Kitty's cost basis is in the very low 20s, right? Was it around 22, 23 if I'm not mistaken? And then Larry Chang just bought shares, right? And it's the pinned tweet on my profile right now. Larry Chang just bought shares. And by the way, if you don't already, follow me on X. I always post my schedule each week for when I'm live streaming, usually Mondays and Wednesdays at 7:30 Eastern. But this is all the times he's purchased shares over the past 3 years. And this was the highest point at which he purchased. Sorry, this was the highest point most recently at which he purchased shares out of all of his previous share purchases over this span. So that does beg the question, could he buy more again if the stock goes even lower? Potentially. We'll have to see. I think the merger and acquisition won't be related to electronics retail. It'll be something that can synergize with the current operation. For example, BBY. They might also buy public equity at great value. Let me be clear though, BBY is absolutely dead in the water, and their latest lawsuit against Ryan Co. is laughable. Tidhead, thank you for the clarification. I appreciate that. But I see what you're saying in the sense like something relative to like the retail kind of business model potentially. But that's where I think you really do have to believe in the management team because at the end of the day, can't stop saying at the end of the day. Do I do this in every stream, guys? Let me know if I do. But at the close of the day, it really comes down to what they decide to acquire or merge with. So you really do have to believe them, and obviously it will have to go through a shareholder vote, but they are the ones who initiate it. So all just food for thought there. We'll see what happens. And then I want to cover the Game Informer thing. I have a little bit of mixed opinions about this, to be honest with you guys. Like, I think it cuts costs. Like, well, part of me is like, it cuts costs because there's definitely a whole team working on this. And on top of it, like, how many people are really reading magazines these days? Like, how is this really a part of their business model? But then the other side of me is like, and it's hard to know it's true, right? Because it's just the internet. But people are saying that they were unrightfully laid off. A lot of these workers that were part of the Game Informer division of GameStop completely blindsided. And then also, I don't know why they had to delete the whole website. Why not keep an archive for people to go back on? But it's also one of those things like now that it's gone, everyone's making a big deal, but everybody's making a big deal saying, oh my gosh, Game Informer's gone. Were they like reading Game Informer every week before that? So I kind of have mixed feelings about this one. And the fact that it was, 33 years old and it was the oldest, if I'm not mistaken, gaming magazine and one of the only ones left, like, I do think that's a little bit unfortunate. Why couldn't they have just kept it? Maybe shrunk the team just to a digital version unless somebody specifically pays for the paper one. Like, I don't know. The nostalgic effect, I feel like, is part of GameStop's brand a little bit, right? So a little bit of mixed feelings about that, but I'm not going to lose sleep over it at the end of the day. Again, at the end of the day, if we had an at the end of the day counter, it would be going nuts right now. But I have a little bit of mixed feelings, and it's another one of those things where I want to really digest it and then create like a really strong opinion in like a couple weeks from now and tell you guys how I ultimately really feel. So stay tuned for that. Come to future streams. But a little bit of mixed feelings right now on it. I feel like there's good portions to it and there's a little bit of unfortunate portions to it, right? But also that's part of business, right? You got to make tough decisions sometimes. So Tetron, checking in, buddy. Bought more shares of Jimmy today. Chad Clifford, hope you're doing well. Thanks for popping in. Appreciate you. But yeah, so the last thing I kind of want to go through here, and again, let's just clarify here that anything could happen this next week. Like, I think no matter what, we're gonna get a lot of volatility. And is the Japanese market open yet? Let's see. Wall Street gets routed. That's a perfect picture for today. And honestly, though, the way the morning was, it felt like it was gonna be much worse. And you see, futures are already up. So let's see. Let's go to Asia. What's going on? Okay, here. Oh, wow. So look at that. Japan's market is open right now and up very big to start the day, although it is worth noting that, 7%, while that is a big move, anything that can go up that fast can come down just as quick. And obviously, it went down a lot the days prior going into this. So this little move up, still far from where it was. And also, it's worth mentioning it could dramatically fall again, right? And it is worth noting again that the market's been just accumulating, appreciating. And then also, look at this. This is what's remarkable to me. And how Japan has been in a stagflation period where their stock market's all-time high was 1990, and they just recently finally eclipsed that number after 34 years. and now it's all about the crumbling down. So it seems. So it seems, right? But Japanese market is open now, so see how that shakes out. Just like I was saying, there could be a lot more volatility. I expect this to be very volatile. I expect futures to be very volatile, and just the next few weeks, and even without this factor, right? Just with an election coming up, I think markets as a whole will be very volatile. So just be mentally prepared for everything and anything. I think that's the best way to go about it. But I trust management. Oh, not trying to be bearish, but getting rid of Game Inform was a misstep. Change it, reform it, not sure, but just delete it. That was their brand value right there. But I trust management who knows the numbers and metrics enough to know they see something I don't. WM, I think that's a fantastic take right there, where it's like, management knows the numbers and metrics to make the right decisions, or you have to trust management to do so. But I agree, where it's like, to just delete it, it also just leaves a bad taste in certain people's mouths, right? And you're trying to rebuild the brand, trying to get some loyal customer back that are maybe like in between. They're kind of okay. It seems like it's improving, but then they see that and they might be like, screw GameStop. I'm not shopping there anymore, right? There's gonna maybe not GameStop shareholders, but there's gonna be some consumers out there that are gonna think like that. So it's essentially a little bit of negative PR one way or another, right? And again, to only certain individuals, but yeah, I think it's definitely arguable. And again, I'm going to kind of let the dust settle, see how it all shakes out, and formulate a greater opinion as time rolls on. But Tetron, stopping by to hit that like button. Sharon, I appreciate you. Thank you very much. Thank you for popping in. I get it. People are busy. Whether you guys spend just even a little bit of time here, I appreciate you guys very, very much. But yeah, I'm going to get ready to wrap it up. I want to go through a little bit of Palantir earnings. I think we covered a lot today. And I'm sure there's going to be a lot more by Wednesday when I do the next stream. That'll happen because again, I really think there'll be a lot more volatility. I don't think this is just going to be like a disappearing type of thing, or it'll kind of like cool off, and then all of a sudden this story will heat up again in a few weeks, right? Because the market is unpredictable at the end of the day, right? That's why Warren Buffett says, the stock market's a device to transfer money from the impatient to the patient, right? That's what he says, not me. But looking at Palantir's numbers, this was like the one bright spot in the whole stock market today. Because when you look at their after hours, they obviously went up a lot and it's trailed off a bit, but it was very positive and pretty much made them, they were up overall. I don't really think there's many other stocks that didn't report earnings besides maybe like Lockheed Martin, right? It was pretty much sideways, that were up like this at the end of today. So Palantir reported great earnings. They actually raised their guidance. I think that's a large part as to why the stock price rose. So U.S. government revenue grew 24% year over year, 8% quarter over quarter. Commercial revenue 33% year over year and 3% quarter over quarter. Government revenue grew, and this government in general, not just U.S. government, 23 year over year and 11% quarter over quarter, and 27 deals over 10 million. So they're really starting to just implement their technology with more and more companies, and the more and more companies they use, the more and more likely it is they sign bigger deals down the line to further use their technology, right? So I think it's a very unique company, and in my personal opinion, again, do research. Don't just take what I say and go, oh my gosh. But I personally think it's the best play on artificial intelligence at this given moment in time. Although if Nvidia went something to like $60 a share, I think that would be pretty attractive. I'm not going to lie. That's kind of the number I have in my head with Nvidia, but I'm keeping that back here, right? And obviously, we're very far from that, right? Nvidia's fallen from like 140 down to like 100, and it went as low as like 90 today, but it's going to have to go a heck of a lot lower to get to 60, right? And then even then, some could argue it could go to 40, 30, like nobody truly knows, right? But I think below 60 is where you maybe start considering it, right? Or I start reading about it more and becoming a little more curious. But really, again, the thing that helped, and this was the most net profitable quarter for Palantir. So also Palantir is an example of a company that was breaking even for a long time, slightly losing money, and now they're on track to continue growing, where their bottom line is growing with it. So this is their most profitable quarter yet, and they expect to continue to be net profitable. So if GameStop goes down that same kind of route, you can kind of see how Palantir's evolved over the past couple of years as that change has happened. So fundamentally, if the same type of thing happens for GameStop, right, one could argue we start to see a chart like this. So just some food for thought there. And then the big thing here is their guidance for Q3. They expect revenue between 697 to 701 million. and adjusted income from operations of 233 to 237 million, and they're earning a decent amount of interest income. They actually bought back a little bit of stock as well, so that tells me they think the share price is undervalued. I mean, that's throughout the past quarter, so that could have been, like in this period, it might have been slow 20s. It might have not necessarily been on this way up here, but that just tells me they believe the stock price is undervalued in the low 20s. So that's definitely worth noting. But full year 2024, they're raising their guidance estimates to between 2.7 billion and 2.74 and 2.75. Only a little bit higher, but also raising our adjusted adjusted income, from operations, a little bit closer to a billion. We're raising our U.S. commercial revenue guidance in excess of 672 million, representing a growth rate of at least 47%. And you could read, more about it. Obviously, if you're a shareholder, I encourage you to read the report more. But I think it's an interesting company. I do own a little bit, not nearly as much as GameStop as I own, but I've been following along right now, and it's one of the few stocks that has been a bright spot today. So, and yeah, we'll see how it continues to shake out. But I I do think GameStop, if they're consistently net profitable again, they make that big acquisition, they do start to see that similar chart that Palantir does, where they start trending in the upwards direction. And to ignite any kind of short squeeze or just any derivative positions underlying from blowing up, you really need to drive forward as a company. So there's still more work to be done for GameStop, and I think this journey is far from over. I think a recession is just another part of the journey, and one could say, oh, well, 2022 was a recession, nothing happened for GameStop. Look at the first half of 2022 for GameStop and then compare that to the rest of the market. But then it kind of tailed off into the end of the year. But that truly wasn't like a massive recession, right? Like we really haven't seen a massive recession since post 2020. And then even one could argue 2020 really wasn't a massive recession. It was more so a flash crash, right? Because in hindsight, like it was such a short period of time from when the market hit its all-time low to getting back to its new all-time high. It took only 3 months, but that's because we just printed money at an unprecedented rate that's never been seen before, and also just took our debt to GDP significantly higher. And where is it? Where's the debt clock? U.S. debt clock. There it is. Yeah, so I was talking about before about all the spending. Look how much we spend on Medicare. How much? 1.7 billion on Medicare, 1.5 Social Security, 913 billion on defense slash wars. Look at the interest we're paying on debt. We're almost paying more interest on our debt than we're spending on defense slash wars. And then not to mention all the Medicaid and Social Security. And you can see the U.S. federal debt to GDP ratio is just climbing, climbing, climbing. And now we're at roughly 122%. And U.S. national debt, just the other day when I looked, it was just hitting 35 trillion. Now we're already at 35.13, which we're like, oh, that's not that much, right? But keep in mind, when this goes from 35 trillion to 35.13, that's 133 billion dollars, like that, in a week span. And again, the debt accumulation is exponential. And when you look at debt per citizen, that's just mind-boggling, and especially relative to U.S. federal tax revenue per citizen, right? So it's crazy. This one really illustrates it. It looks very pretty and all, and very fancy. And you could also do a time machine. You could go forward to what it's projected to be, right? Look at the 2028 projection, estimated to be 46.7. If we spend even more aggressively, we end up in a tougher market scenario. This number could go even higher. So we'll have to see. And then you could see worldwide as well. And then you could see, look at Japan. Look at their public debt to GDP ratio. Already a massive, massive amount, 300%, right? In the UK, 109%, France, 128%, 173%. So this is like a worldwide problem. Greece, 229%. So with it being a worldwide problem, that makes it a situation where Bitcoin, I really think, is going to emerge. And again, do more research before you put any money in Bitcoin or gain interest on it. Right? And this is the projection. So let's go to where we are right now, the world debt clocks. So how is this 89%? Oh, it's public debt. Okay, external debt. So, but if you look at total debt, but even this number is bigger than this. So this should be 100. The math ain't mathing right there. Whereas like right here it is. So all just food for thought, guys. All just food for thought. I do just enjoy sharing the information with you guys and hanging out. And it's been a great time this stream. So yeah, I appreciate you guys. Uh, Nikki Futures looking green tomorrow. Hadouken, thank you for being here. Yeah, I was just briefly checking on that. So we got a long way to go. Look at that. We're at 8% now, and we'll see how it shakes out. There's a lot of time between now and tomorrow morning, but it's one of those like I can't help but kind of watch it throughout the remainder of tonight. I really try to usually look away from the stock market when I'm, it's not market hours, but it's tough. It's tough when things are getting spicy. So yeah, 8% right now. So we'll see how it continues to shake out. I don't want Chewy on here. What the heck? Let's give me the candles, not the step. So yeah, these are 5-minute candles. We're climbing right now. It could climb a lot more, right? But then also when you think back, like I'll leave you guys with this. When you think back to the pandemic when everything's really crazy, remember the stock market would be down 10%, and the next day would be up 10%, and then it would be down another 9%. So we could be heading into a period like that where like this might look like great. Index closes at 35,000 by the end of the day, but then all of a sudden by Wednesday it's back at 32, and then Thursday it's at 30 or 29, right? Again, just hypothetical here. So it could be a period where we just get a lot of volatility, and that volatility continues over the next several weeks. And that's what took place in 2020. Obviously, the situation was a little bit different and very sudden, and nobody knew what the heck was going on in late March 2020 into April. It was like just unprecedented time. I didn't know what to think. I was like wiping down every single thing from the grocery store like other people were. It was like, what is this? Nobody knows what the heck. So sudden too, so sudden. I remember I was in college still, and it was like we're leaving for spring break. Little did we know we wouldn't be coming back from spring break. We would just be doing the rest of the semester fully online. That was truly like, wait, what? That's crazy. Oh man, what a time! What a time! What a unique experience. I'm just thankful it didn't happen to me in high school because my younger brother and cousins, it happened to them in high school, and they said it just really, really sucked. And I feel like I it would have been so super disappointing for me if it was in high school. Whereas for college, for me, I was commuting anyway. I was working a lot, so it's not like I was super close with college friends. Most of my friends I have now are actually people I know from high school, or various. I'm not always right, not everybody, but point being, I didn't just get like a ton of college friends. So like, it's not like I missed out there. I didn't really care. And really, the best thing for me, I met my beautiful girlfriend in college, so I'm very thankful for that. And then I got my degree, so I'll take it. But it's also worth noting that, GameStop really pretty much broke even on the day. Like it only wound up down 2%. It climbed all the way back. And then when you look at the after hours, it's pretty much even. Although I'd say take the after hours with a grain of salt, but it's pretty much even at the end of the day. So we'll see what happens. I appreciate you guys watching this very, very much. I'm going to be back Wednesday, 7:30 Eastern. Stay tuned. Watch everything very closely. Try not to overreact. It's very easy to get emotional in these times of high volatility. Just try to be mentally prepared for everything and anything. And again, I appreciate you guys so much. I hope everyone out there has a fantastic night. Take care.